It's 14th of January 2021, and this is Frontier Opening Bell, a program of Frontier Africa Reports. Thank you guys for joining us on the show today. With me on the program today, we have Akintunde Suleiman, a research analyst with Greenwich Merchants Bank, and the executive editor and CEO of Frontier Africa Reports, Bosin Omofaye. Thank you, gentlemen, for joining us on the show this morning. Of course, we now have Onyeka Ijeoma joining us from Vertical Capital Manage. Joshua Debisi, I apologize. I apologize. It's Joshua, we're supposed to have Onyeka actually, going by the schedule, but we have Joshua or Debisi joining us now from Vertical Capital Management. Thanks a great deal for joining us on the show. Let's hit the ground running with the market status from yesterday. Nigeria, our market was positive by 0.11% on Wednesday. Ivory Coast was down. The tail spinning continues, was negative by 0.21%. And of course, the Egyptian market in Cairo was positive by 43 basis points. Kenya was positive, 42 basis points, and South Africa negative by some 0.10%. That's the data for Wednesday. Let's look at the stories we now have from the eastern part of Africa. Kenya Reinsurance Corporation is in court over ownership of prime props worth 1.63 billion shillings. They've taken some government agencies to court for some purpose. Equity Bank gets some 5.48 billion Kenyan shillings for SME loans from Dutch Development Bank. And of course, Jubilee Holdings is to expand live Medi business after some 7.7 billion shillings alliance deal. Uganda decides 2021. The general election holds today. It's something that folks are watching in that region for their investment decisions. And finally, the AfCFTA launches an application to link SMEs across the continent. Bosin, we need to get you to give us your thoughts on these developments. How would you want to react to Kenya Re, first of all, that has taken some agencies of government to court? Do you think they stand a chance to win those cases?
Well, it depends. I don't have the full details of those court cases, but the one thing you know about judicial process is that you know the entry point, you can't predict the exit point. So the exit point could be anything, could be anyone. So you're never too sure. But again, Kenya Re is a very big insurance, reinsurance company, and I'm sure they must have had a whole lot of interest or business interest with the government prime properties. So the issues of the payment of claims or issues around other financial transactions could have gone wrong. I'm sure this was not a relationship that started yesterday, if you ask me. So, because we are likely don't have more than one or two reinsurance in any African jurisdiction, that to my knowledge. So they are not your regular insurer. So if relationship gone sour between Kenya Re and the administration in Nairobi, then I'm sure they will definitely have a way of sorting it out in terms of being a business deal, and they can continue to do business together. I think for today, the biggest news within the East African corridor will be the Ugandan elections. It's been a very tough time coming to this. Social media were knocked down at some point. Internet access became patchy. President Museveni came out to lash out strongly against Facebook, saying that the company, the social media network, has to be responsible in doing business and fairly within Uganda. We did a seminar or a webinar yesterday on the Uganda elections, trying to speak to some of the parties on the ground, how critical Uganda really is for the East African economic community, for trade, for the new AfCFTA, for new businesses. This is not a time to have any fight on the ground, politically speaking, in East Africa. It could have a knock-on effect on other countries within the region. And Uganda is a main hub in terms of trade and cross-border, in particular land trade, informal trading across the Tanzania, Rwanda, Kenya, Tanzania, and all the way down to Southern Africa. So the whole lot of issues. President Museveni has been in power for 35 years. Is going to be, if he wins this election today, then he will be is he will be discussing with the 7th American president. So United States have changed their presidents 7 times, and he's still in office. So if he wins today, he will be sitting in and be having a handshake with the 7th American president. So that gives you a sense that 35 years is a whole lot of time in the political life anywhere. And you can see the dynamism that the Americans have brought into their own democracy, despite Donald Trump's past 4 years, depending on who you speak to and people's views. But again, the beauty of democracy is this multi-party system that will help everybody move on. Again, there's an election coming in Kenya in the next year, I guess. Tanzania has just concluded one where President Magufuli won a re-election. It was a bit unpleasant in some way. Ghana had an election last December in West Africa. It was smooth sailing, as it were, 99%, so to speak. So everybody's looking now at Uganda today. Uganda is very key to American interest in East Africa. Let me tell you that. Let everybody know that the Kenyans seem to lean more towards the British. So the main ally for Americans is Uganda within the East African corridor. But we'll leave all the 48 hours. The result is expected to be out. We look forward to that.
Okay. Thank you so much, Paulson. Moving on to West Africa now, where Nigeria's Vice President Yemi Osinbajo wants higher oil production at lower cost. And of course, the Nigerian Stock Exchange is now looking to hold its 2020 virtual market recap for 2020 and 2021 economic outlook or market outlook. That will be holding on January the 19th. Now, Nigeria's Daystar Power secured some $38 million to expand across Western Africa, and Senegal's economic activity is stronger at 3% in November 2020. Finally, Global Credit Rating Limited now buys 65% stake in West African rating agency. Let me start with you, Joshua, to get your understanding of the Vice President's desire or intends to have higher oil production at lower cost at a time when we're talking about a production cut and production measures at the OPEC level.
Well, okay, so the thing is that, you know, the Vice President's statement was a bit broader than that. You know, he alluded to the petroleum industry bill that is, you know, currently being worked on again, that they're attempting to pass. But I think with regards to your point about, you know, the fact that obviously the OPEC cartel has essentially, you know, tried to control oil prices by, you know, imposing production costs or cuts across the board, and including on Nigeria. The truth is, obviously, our economy is not in a position to, you know, completely comply with those cuts. We've known this for a while now, that, you know, if we were to fully comply, already our financial situation would be even worse. Now, the truth is that not only do we have to look at that, we also have to look at the margins for our production. Because, you know, obviously with the price of crude currently and the cost of production, what I think the Vice President was also alluding to is cutting our production costs as well in order to, you know, improve our margins. So we have a lot of, you know, ways in which the petroleum and the oil and gas industry can be improved in Nigeria. One with obviously, you know, better regulations in the entire sector through the passage of the PIB. Another with cutting our overall cost of production and making it more efficient to extract oil from Nigeria, thus improving our profit margin. And thirdly, by improving production. Now, the truth is that obviously these cuts will not last forever. Thankfully, Saudi Arabia has, you know, agreed to voluntarily take on additional cuts, which will sort of ease the pressure on, you know, countries like us, because the truth is our contribution to the overall, you know, cuts is actually not that great. But you know, overall, if, you know, bigger producers like Saudi Arabia are taking on a heavier burden, it doesn't give us the leeway to, you know, just ignore the cuts completely, but it sort of gives us a little bit more wiggle room. And I think that that's really what the Nigerian government is, you know, banking or, you know, expecting. So I think those are the different factors that are sort of, you know, mixing together to come to, you know, the Vice President's stance, really.
Akintunde Suleiman, what do you make of the stock exchanges, the Nigerian stock exchanges plans to hold a virtual meeting to basically recap the year 2020 calendar year and give us forward guidance for 2020? Any expectations in particular?
Thank you, Tempo. I guess this has always been this has always been a tradition for the Nigerian Stock Exchange, and it's to me it's a good way to kick off the year. You guide investors on what has occurred in the previous year and what would be expected of the boss of the exchange to be doing in the present year. So it presents a good opportunity for the management of the exchange to tell the investors what their plan is and how they go about go about fulfilling those plans and what the investors should expect of the exchange in terms of product development, regulations, and innovation. So I think it's a good one. I expect that the exchange will give going clarity on how the implementation of the demutualization is going and when we should expect full implementation and how this will affect investors and general stakeholders. So I think it's a good one and it's a good avenue for them to share their plans. Just up quickly to the oil issue that Joshua just spoke about. If you look at Nigeria's cost of oil production, it's about $17 per barrel. If you look at Saudi Arabia, it's about $8. You look at Iran should be about 9, and Iraq at about 10, I think. So that gives us sort of guidance onto where and how we should actually cut our cost of production. It's going to chop into our margins largely, and this is not a matter of sustainability for us. I think it's a matter of just to continue to thin. If you allow those margins to continue to erode, it will only mean that we'll be out of margins at quicker than we expect. So it's a matter of survival for Nigeria rather than just a matter of even sustainability. If you look at Angola is about 20 to 25%. $20 to $25 per barrel in terms of production, and we can see what this has done to their economy. You can see where their inflation is and how deep their GDP has dipped.
Okay. So guys, let me still get you to speak to the Global Credit Rating Limited buying so 65% stake in West African ratings agency. I know you may not have full details of this story, but I need you to speak to the relevance, how this speaks to the relevance of data in Africa at a time when we are now talking about trade integration. Akintunde and Joshua, would you mind speaking to that?
Okay, thank you, Tempo. I think it's pivotal to the financial services and even the Nigerian economy generally. You'd see that a lot of we analysts we suffer from the death of data, available data. But credit agencies coming into this space, it's a good one because it gives us more information and more data on to take informed decisions and for encouragement of investors generally, because what investors out there look at is what is the credit rating, where do these instruments stand, what is the sustainability of this instrument and the issuer. So it's a great one that we're having more credit agencies. It's a great one that we'll be having more data available, because data is the engine of a lot of financial institutions today. Everyone that is trying to take an informed decision these days seeks for data, because data is the engine of what we all do in the market at the moment.
Okay, Joshua, do you mind giving us your thoughts on that?
I'm sorry, my connection sort of went cut off there, so I didn't.
Yeah, it looks like. Oh, okay. So I wanted to hear your thoughts on the Global Ratings Agency, which is a South African company, buying 65% stake in West African Rating Agency. How do you think this speaks to the relevance and significance of data in the whole Africa trade integration push at this point in time?
Okay, I'll take it from this angle. I think obviously the thing is that, okay, with speaking specifically now to Nigeria and West Africa, I think one thing you will find is that access to data and being able to manage and manipulate data is a very important part of our development, and also a very important part of.
Okay, we're losing the connection to Joshua Debisi again. Bosin, let me come back to you, and this takes us now to Southern Africa before we run out of time. We've got the South Africa's manufacturing output down by 3.5% year on year. We have Alaris Holdings Limited in talks now to acquire UK business. Santam offers 3 months pay only for business interruption claims. SeedCo is now to acquire all the shares of the Zimbabwean business. Then you have exports rising to 20.3% in Zimbabwe as well, as against a 4% growth in terms of imports. Bosin, what will be your pick, and how would that speak to investment decision of our viewers today?
Well, I think the South African manufacturing output, which you spoke about, 3.5% in December. We all knew the whole impact of the coronavirus during the period under review. They exited level 4, as it were, and then in September, and then they went back into that level 4 again with further restrictions toward the end of last year, with bans on alcohol sales, transportation of alcohol, and what have you. So the Beer Association folks are unhappy with that. So the entire manufacturing output in Africa's most advanced economy is expected to take a knock from that. Now, when you look at Santam, what Santam Insurance is trying to do is that, look, claims were coming in left, right, and center for 2020 from businesses. And they're saying, look, we can't just pay everybody everything that you claim. Yes, we know that the impact of the virus was there in everybody's face, but excuse me, we can't pay you everything. So Santam Insurance is now saying, look, we're going to pay everybody 3 months claim only out of the 12 months that last year was. So we can't pay 12 years to everyone. We can't cover everything. If we cover everything, we also won't survive. Who's going to cover us? So I think it makes sense to say, look, we're going to pay everybody 3 months, and you go sort out the rest. I think it's just a way to say, look, if I have to save you, I have to save myself. And I think that's just what Santam Insurance has just decided to do there. If you do 12 months cover for everybody who you do business with on insurance claim, then you too won't have anything to cover yourself. I think it's as simple as that. SeedCo story is very interesting because this agro-allied company is in Botswana, in South Africa, and in Zimbabwe is doing so well. So the idea is because SeedCo is now listed on the Victoria Falls Exchange, which is the new stock exchange in Zimbabwe. Now the SeedCo is now buying up that particular subsidiary in Zimbabwe just to make sure they get a whole lot bigger. They've been able to secure a whole lot of funding from multilateral and bilateral sources, and it's quite a good company. If you look at their shares on the Southern African exchanges, it's quite a company. Thank you.
Thanks a great deal, Bosin. I mean, Akintunde, let's look at exports growing to 20.3% for the month of November, and that stood at $528.9 million US dollars, not Zimbabwean dollars now. But imports, also grew. It grew to 4%, $509.7 million. If you want to compare these with what we see in Nigeria, what will be your analysis?
I mean, it's expected. I presume this data is compared month on month or quarter on quarter. If you benchmarking it with the previous year or the corresponding period of the previous year, I'm sure you'll be seeing a significant dip. So I think it's good and to at least to have improved from what they did the previous year. The previous quarter or the previous month. The same thing goes for Nigeria. We're expecting that our Q4 export data will be significantly better than what we witnessed in Q3. But the downside to this is with the widespread of the the second wave. It only means that all our growth expectation and all our forecast in terms of jumping out of recession in Q1 is being threatened, and the second wave is not coming as easy as we expected. It's coming with us on full throttle. So it's the downside risk, but we are expecting that with the development of vaccines, that this would stem down the impact. But this brings into question the infrastructure and procurement plans of African nations. How do we intend to distribute this? How do we intend to procure this? Because already we are seeing debt spiking across every economy, and we know that revenue is shrinking across every economy as well. So who is going to pay for it? When we pay, how do we distribute? What are the modalities for people to get vaccines? Specifically in Nigeria, I've not seen a whole lot of enthusiasm from citizens or the government in terms of, oh, come, let's get you vaccinated and all that. The same thing goes for a lot of African nations. So it's we will be expecting like a bigger lag even in Africa than other economies in terms of deployment of vaccines, and we getting COVID out of our way because we are not just pushing as fast as we should, and we are probably because the facilities are not there in terms of financial and even infrastructure to deploy this. This is going to be a bigger lag, and this will impact general economic play in terms of export, import, and every other economic plans and forecasts that we have had in the past 6 months.
All right. Thank you so much.
If you ask me, if you ask me, just to just add a few to what Suleiman just commented about, I think Africa is missing a very big opportunities here, because as we've seen the second wave in Africa, it's not even as high in fatalities as we currently see in Europe and in the United States and elsewhere. So let's be very frank with ourselves here. Yes, the numbers have risen, but not as exponentially as we're seeing. Again, a number of issues are coming through where it has to do. And again, there were a lot of concerns last year that this particular winter period, which started November, December last year, for the Western Hemisphere is going to be very brutal in terms of the COVID-19, like in the UK and elsewhere. So I think that is playing out very seriously. Now, we're getting into a different season here in Africa, and although the numbers are rising because of the second variant, but not as much. So what does that tell us about what the government should do? The fiscal authority should take advantage of that to quickly use the population that is not infected to ramp up on production, on productivity, manufacturing, exports, agriculture, SMEs, so that we can catch up with we can provide some catch up, as it were, on where we're coming from before the folks in Europe and United States and elsewhere get a hand on the vaccine and what have you and all of that, and they can get back to production, because they will always outlag us. So I think that the situation right now shows that we were not prepared for any pandemic. We're not prepared for anything whatsoever. Look at Nigeria now, just rambling around 2.2, 2.1 million barrels per day with condensate, and everybody's going up and down. We're still talking about it. There's no significant move, as it were, to see any major investment that is coming through into the industrial manufacturing from the SMEs level to MSMEs and all the way up. We're not seeing it. So it's not happening. So right now, we're just going to lose this crisis in the manner of speaking. And by the time the Europeans and the Americans get back on track, you'll be shocked how fast they will move.
I think the major constraint for governments across Africa at this point remains the exchange rate constraints, and of course the cost of inputs, which, if you look at by extension, it really largely depends on what is going on in the European world, in UK and the advanced markets generally, because this is where the capital inflows is also expected to come in from. So that seems to be their constraint generally, but we don't have enough time to actually dwell longer on all these issues. Let's just quickly conclude the show with what we have from the Northern African market, where Egypt signs a $1.1 billion deal with International Islamic Trade Finance Corporation. And of course, the Egyptian Central Bank has told banks that no cash or even electronic dividends to shareholders for the 2020 calendar year. Qatar Airways flights is now going to Cairo. That will commence from January the 18th, Alexandria on the 25th of January. And of course, Egypt launches EBRD, UNWTO tourism recovery package. One very important story here is the US International Development Finance Corporations launching $100 million investment fund for Moroccan entrepreneurs out of the entire $5 billion budget for the Northern African market. We know today that Algeria FA opens a second national football academy. Bosun, how much of impact will these fund, the U.S. International Development Fund of $100 million investments have in the Moroccan, entrepreneurship market, as well as the SME market at large, when you look at the Northern Africa space at this time?
I think it's not the impact here, the tempo. These announcements are coming fast and furious more within the Northern Africa than in West Africa, in particular for economies such as Nigeria. $100 million today, if you throw it on Nigerian street and you do a normal exchange rate, you're talking about close to 500. Oh, I'm sure it's going to be a whole lot more than that. Sorry, that's going to be about about $1 billion or so. So look, it's a whole lot of money on the ground, right? Support Moroccan entrepreneurs. Morocco is an technologically advanced industrialized economy. Make no mistake about it. The Americans will go to where the environment favors them. The Moroccans have one of the largest solar power fields on the continent, and they're getting energy. So the Americans will support them because they want to create jobs for Americans. Of course, hold on. That money will come through to Americans. They will get cheap imports. They're going to make a deal. China this morning changed their trade minister or trade top official because Joe Biden is coming into office as a new American president. They're putting a new man there and we're taking away the man who had been negotiating with Donald Trump. Do you see everybody is taking geopolitical, geoeconomic this strategy. That's the way it works. Now, another story is about the Egypt tourism industry with the European Bank for Reconstruction and Development. See, the Europeans, the Americans, everybody is pitching into North Africa. And we're not seeing such money coming into Nigeria, who has given us a dime from any international organization for our entrepreneurs. The last money was that 1.5 billion or so that Bank of Industry got just a few weeks ago from a consortium of 12 international banks, which AfCFTA Bank is midwifing for our SMEs. But what Americans, the Department for Finance is doing is to directly intervene by $100 million US. That tells you the confidence that the Americans have in the Moroccan economy. But we have to go to the commercial banks in Europe and elsewhere to borrow the same amount through the Bank of Industry for SMEs.
And that comes with higher borrowing costs.
Thank you. So there's a whole lot of cost. There is a commercial, we're taking that, Nigeria is taking that as a commercial loan. Whereas America is saying, look, this is Uncle Sam's money, okay, with love from Washington, $100 million in a bag. That tells you the difference about what we're doing here, how we are perceived as a destination for investment by the big countries of the world with deep pockets.
Funding is a major issue at this point in time for countries, especially.
But I'm sure Akintunde wants to speak on the Egyptian banks. Exactly, I'm sure they are thinking of. Akintunde, so the man wants some dividend, whatever he wants dividend, I'm sure.
I agree with you, Brassen. If you look at the infrastructure index across African countries, which was done by the African Development Bank, you see that the Northern African region has about 73% index compared to Southern Africa, which has about 35, and Western Africa, which has about 20. So that distance is huge. The infrastructural gap is there. So it's when you come and fund West African entrepreneurs, they still have a lot of costs to cover compared to their counterparties in Northern Africa. So it makes all business sense, it makes all economic sense, financial sense to go give the guy in Morocco or go give the guy in Egypt those funds to turn over, because he will do better than his brother in West African states, because they have a whole lot of costs to cover to deep dive into the CBN saying no cash dividend to the banks. I mean, I hope the CBN in Nigeria is not going to do that. but the alternative is as well for the banks to have a script dividend. I mean, we won't mind having more shares for our holdings. So if they can't pay cash, they should please give us some additional shares. We'll do that and we'll turn it around.
After all, the employees and of course board members are going to be getting bonuses. So that would be a very wise suggestion from the shareholder community in Egypt to the central bank, and I hope they tap into that. Thank you so much, gentlemen, for joining us on the program today. Akintunde Suleiman, you're the research analyst from Greenwich Merchant Bank. I appreciate your thoughts and analysis. Earlier, we had Joshua Odebisi, a banking analyst with Vertebra Capital Management. But the internet hasn't so much been so much of a good friend this morning. I mean, it's been freezing. Even at some point, Bosun, I saw your shots freezing. I hope mine wasn't freezing here from UK. But Bosun Omofaye, thank you so much for your analysis this morning. He is the executive editor of Frontier African Reports and the chief executive for this wonderful platform. I'm Temple Ashadio. Thanks a great deal for being a part of the show this morning. We'll see you next time. Bye for now.